So clearly, regional banks are in a lot of pain.
Yeah, not such a great place to be. The bigger banks, probably a bigger bonus. We talked with Alan Johnson with the compensation consulting firm Johnson Associates, and he calls it a case of the haves and have-nots, with bankers at regional U.S. lenders hurt by small bonus pools, while year-end bonuses at larger firms expected to rise by double digits. In fact, you're looking at what's ahead at a global banking giant. Those bank bonuses are poised to jump as much as 20%, while at the struggling regional U.S. lenders, bonuses could fall by about the same amount. And as we know, a lot of these smaller banks saw their stocks take huge hits, a lot of withdrawals, all after the collapse of regional banks such as SVB and Signature and Silvergate kicked off a season of banking turmoil in March. You're looking at the year-to-date stories for a lot of these regionals. It's a sea of red and some big declines. The more recent collapse of First Republic kicked off a whole new round of volatility. Drop into the Bloomberg, you'll see that the rally in some beaten-up shares, such as PacWest, which has a record rise of 83% on Friday and is on its third day of increases. A lot of those gains we saw in the Tuesday U.S. session were starting to be paired as we approached the end of trading. So all of this is happening as volatility continues to be the name of the game for the regional group, and smaller, perhaps 20% less bonuses is the name of the bonus game at those same banks.
The name of the game for the big banks, though, these rate hikes have really brought these windfall profits.
Yeah, the very rapid rate hikes that caused these regional banks to struggle or have mismatch, duration mismatch, has actually been a boon for the banking giants, such as Citigroup, such as JP Morgan Chase. We know that their trading desks came in with huge profits as the high rates caused big benefits. We also saw them gain deposits as people withdrew their savings from regional banks seeking greater safety in some of the biggest banks, Bank of America, for instance, Citi, JP Morgan. Last year, though, the average Wall Street bonus plunged 26%, and this had a lot to do with the slump in deal making and the bank's focus, which continues to be a focus on containing costs and cutting costs, all of which took a dent out of compensation. This year, we've got investment banking revenues still under pressure, headcount being cut at many banks. So according to Johnson Associates, bankers who advise on M&A could actually see their bonuses decline by as much as 20%, while others rise. Counterparts in debt underwriting, for example, are among those that are poised to see a gain. Back to you.